It's tough out there. You don't need me to tell you that because it is looking weak. The only respite, if you will, from the brutal selling that we've seen today is that we are off from the lows of the day, if that is any solace. The intraday of the Nifty will show you that we are no longer as weak as we were sometime during the lows of the day. Though I must say the Bank Nifty is steadily headed lower, and it was down about 0.6, 0.7%. Now the Bank Nifty is trading in or around the lows of the day, if you will, about 1% lower. So here there is a small issue, of course. The VIX has jumped up in trade, so India Volatility Index is certainly higher. Was about 7-8% and still about 6.5% as we speak. And the market breadth has looked terrible, really. But Tamanna, let's speak about the broader end of the spectrum. Just get the advanced decline ratio once before we get to the heat map, because the market breadth has a yawning gap and it's only stayed wide. So 1:4.5 or 2:9 maybe in favor of the decliners. Let's get the heat map there too. Maybe 2 or 3 stocks. Oh, okay. There's 7 stocks in the green. M&M and Tech Mahindra standing out. There is Cipla. So M&M and Cipla both have a brokerage note to themselves. But aside of that, hardly any solace there. On the flip side, look at the kind of cuts. It's not really 7-8% to a heavyweight, etc. It's across the board. You're seeing some serious gashes with upstream oil plagued by ONGC and Reliance Industries, and even BPCL, so downstream, upstream oil and gas, as a sector which has been one of the worst performing sectors in the series gone by. Also has a tepid day today. Hero MotoCorp brings up or sums up what's happening to autos. So Hero, Bajaj Auto looking very wobbly in the session today. And consumption names like Titan as well as new specific names like Sun Pharma also down. So net, when Reliance, HDFC, etc. are all looking so wobbly, you wouldn't have anything else, the market do anything else but stay lower. Tamanna, broader markets though under a vicious grip of a sell-off which is not quite abating.
You know, it's very tough to find the silver lining today, Niraj, and unfortunately it has continued its slide. There seems to be no factor which will actually give any real relief. So while we're looking at the small cap about 2% down, we should pull up all the sectoral indices for a second just to give you a sense of how painful the market is today. The India VIX is the only thing which is in the green, which is not a good sign at all. That's up about 6%. Energy stocks, oil and gas, energy being hit the most. Slight bump up in crude prices. Remember, OPEC Plus has decided to push forward its date for production increases from December. They were supposed to start in December. They've said they'll push it by a month. So you've had an increase in crude prices, but does it justify the kind of cuts here? Perhaps not. Some impact on, your HPCL, BPCL because of LPG prices, but really no real reason for this. The Nifty reality, look at that, about 3% down. Infra stocks, media stocks. I mean, there's nothing which has been spared. The broader indices really taking the brunt of it. In fact, IT relatively looking better, one of the weaker segments from the morning. I want to just pull up the market breadth for a second before we go to the top gainers and losers in the broader market. No point of talking about specific stock stories because this is today a wide sell-off. Look at that. 413 advances to 1,775 declines, and that gap is only yawning. Look at some of the key gainers and losers, and you will just see, maybe if you're looking for a reason, those who have declared results even a few days ago, the market really coming down heavily on those companies whose numbers were not up to the mark. I mean, that's probably one of the reasons that Poly Medicure would be seeing an 8.5% cut. Vodafone, complete pullback. It was, remember, up in the Diwali Muhurat trading session. No reprieve there. PVR Inox, one would have thought decent kind of an upside, and for the Diwali movies, Singham, etc., but no relief there at all. And Imami, is this a consumption story? Is this something else which is hurting it? Not too sure. Brigade, Bharat Dynamics, there is really no relief here. On the other side, some stocks which are showing a spot of green, and let's talk about some of them. Gillette, again, good number. So if I had to draw some kind of a reasoning for this, perhaps that could be one. Fine Organics, also decent set of numbers. So maybe that's why we are seeing this kind of a bump up in few stocks, but they're far and few in between, to be honest. What are the key reasons for this sell-off? Before I hand back to Niraj and we continue with all of the conversations, we need to talk about what is happening. Disappointing Q2 earnings. The reason we've picked this as number one as a reason, even though there's so many global issues right now, because the underlying problem and weakness in corporate earnings doesn't go away. Let's move on and see some of the other factors. Nervousness ahead of the US poll definitely is one. It's too close to call. Market intelligence tells us that a Trump win would be preferred by Indian markets. Does that happen? Does that not? We do not know. The US Fed meeting outcome, I don't know why it's bothering the street so much. We had conversations this morning. It was very clear that no matter who the next US president is, a 25 basis point cut is something that the Fed is pretty much clear it's going to do by the 7th of November. And the Sell India, Buy China strategy is a big one. Remember, important set of meetings in China this week, which will decide on what is their fiscal measure to boost up their economy. Will that lead to even a greater outflow of foreign funds from India into China is the big question. So these are some of the factors, Niraj, but whichever way you may slice and dice it, the fact that this is a very tough market to be in, and the question is, what do you do here?
Yep, let's ask our guests this question. What are they doing in a scenario like this? Kunal Shah, Senior Technical and Derivative Analyst at Sharekhan with us on the technicals and the derivative positions. Kunal, good having you. Thanks for joining in. The news somewhat not quite starting off on the best footing on the first full day. But what to do now? 1.5% lower, not at the lows of the day, but certainly under pressure. What do you do on the benchmark indices?
Good afternoon, Niraj. I think definitely this is something what was expected from the markets, where we were advising our client as well that at least in the mid cap and the small cap space, don't try to be very aggressive in this market. If I talk about Nifty, even there the weakness is visible. On the technical charts, if I talk, then Nifty has already given a head and shoulder breakdown on the technical charts. The target for the pattern comes at around 23,500, 23,400 zone, which again coincides with the 100 DMA of the bank Nifty as for the Nifty as well, which is placed at 23,456. So I expect this fall to continue towards 23,500, 600 zone to test that 200 DMA for Nifty index. Post that, we can see a good recovery in the markets towards again 24,000. 250, 300 levels on the upside. So my sense is still we are in the last leg. Probably this last leg will still continue. The mid cap and the small cap space is something which I will say that it is an avoid even at the current levels. We might see further correction on the downside. So be very stock specific on mid cap and small cap. But index, I think more 300-400 points on the downside, max 400 to 500 points on the downside is what I see from the current levels. And post that, we can see good recovery on the higher end. For the Bank Nifty index, now this has been the resilient, but you can say all credits to HDFC and ICICI for maintaining those levels for the Bank Nifty. If they would have not been there, then Bank Nifty would have been much lower right now. So for Bank Nifty, I think 51,000 is what I'm looking at. If that is breached for the Bank Nifty as well, then we might see further correction towards 50,000 levels as well. So Bank Nifty, it's a wait and watch situation over here. Nifty is still on a sell on rise. If whatever pullbacks you get, utilize that to sell. We can test levels of 23,600 to 500 on the downside.
23,600 isn't that far, right, Kunal? So, okay, but fair call. You're playing from a trade perspective, 250, 300 points. You would want to bat for that. I heard you say a different tone for the Bank Nifty. Would you go long today on the Bank Nifty if you're a high risk trader?
No, definitely not, because two things, Niraj. One is if we look at the rollover data, Bank Nifty witnessed decent rollovers compared to its 3 months average as well. But still, Bank Nifty on the higher end is facing rejections around that 51,700, 800 zone if I talk about the spot levels. So till the time we are not surpassing that decisively, I don't see Bank Nifty going on the higher end. And if that 51,000 mark is taken out decisively, then we will see that 1,000 point fall in Bank Nifty as well. I think Bank Nifty is still in a wait and watch. I'll not be on the buy side. I'll not be on the sell side. If the levels get breached, then our trade would be activated. But for Nifty, it's active. It's a sell on rise. Whatever rallies you get, utilize that to sell the market.
Okay. Kunal, as difficult as it may be, what are the stocks that you're recommending this afternoon?
See, I think pharma is a space where one should be in such volatile markets. So over here, first pick on the buy side would be on Syngene. So Syngene in this weak market has been showing a lot of strength. The stock has maintained its support of 840, 830 zone on the downside. In fact, in today's weak market, on the daily chart, if you see on technicals, it has formed a hammer candle on the verge of a breakout above its 20 DMA. So clearly short-term momentum could build up in the stock. So this is a buy from the current levels, keeping a stop loss of 842, looking for targets of 900 to 920 on the upside. The second one will be on the sell side, and I think that comes from the IT space. IT is looking weak, and here pullbacks could be utilized again to sell the sector. For me, the first pick over here would be Birlasoft on the sell side. So Birlasoft has already given a breakdown below that 550, 560 zone, which was the support. So now again, if you get pullbacks into Birlasoft, utilize that to sell Birlasoft, keeping a stop loss of 565 and looking for targets of 520 to 500 on the downside.
Okay. Let's go across now to Puneet on what I think, it's tough to pick one sector that is doing badly, but let's pick out auto because auto has been in focus. Puneet, all the auto sales numbers are out. Some didn't look as bad as the others, but nevertheless, that's not really helped the Nifty auto and key auto companies, is it?
Yeah, definitely. But, the numbers weren't so bad. When you look at it was actually pretty good numbers. I think just getting a hit on because of the whole market correction and the magnitude of factors that you highlighted at the start of the show. So when you look at the two-wheeler specifically, Hero MotoCorp 18% volume growth, Eicher Motors 31% volume growth compared to last year. Somewhere like a Bajaj is the only one which is missing just about 2 to 3% volume growth on an overall basis, while TVS is another big winner, 13% volume growth in this particular time frame in this month, specifically in October. And, I just looked at the data on Vahan as well. So this data you see on your screen is, of course, wholesale data, which goes from the companies to the dealers. When you look at the Vahan data as well, the retail sales have been quite positive. So while Hero has wholesale 6.7 lakh units in this particular month, they've also retailed 5.7 lakh units. So that's another positive. Eicher Motors is another one which I took notice of. 1.1 lakh units sent to dealers. 95,000 was sold on, on their retail channel as well. So that's another key positive. While TVS and Bajaj, legacy players maintaining inventory of about a month to like 35 days. So, it's a big positive because inventory correction might be something that we'll, get a lot to know about in this week itself because companies are expected to report results as well. Mahindra comes on 7th, Tata Motors comes on 8th. So, we might get a little more flavor on the inventory, but overall, the numbers are quite positive. I also want to bring in a tractor segment, the first particular month in this particular fiscal year of double-digit growth, and it's, performed very handsomely. So, Escorts is the one which I want to talk about. 20% growth in volumes in this particular year. It's a build-up going into the Rabi crop season. M&M also another key player in the tractor segment as well. About 29% growth versus just about 16 to 17% growth that was expected by analysts. So the tractors and the two-wheelers are key big winners. Within the four-wheelers, it's of course just Mahindra that's driving the growth. 25% growth in this particular month itself, and that's on the back of 20% growth in the last 2 months also. So overall, they've built up inventory, and that's retailed faster as well in this particular month. So another key positive, while commercial vehicle is a sector that's not picking up at all. We've seen Ashok Leyland report a 10% fall, but overall I think the tractor segment and the two-wheeler segment goes very hand in hand with lower inventory, newer launches, as well as faster sales that we've seen in this particular month. So it will be important to see whichever results are still left of what happens, and I think commentary from both Mahindra and Tata Motors by the end of this week, both expect to report results, will be something to watch out for.
Okay. We in fact spoke with Bajaj Auto's Rakesh Sharma on the sales numbers for October, and he talked about his focus on the 125cc category and the growth outlook for the second half of the year. Listen in.
In our area of focus, which is the 125cc plus segment, in this 30-day festive period, compared to the similar period last year, our growth in retail terms is above 20%. And at an overall level, it is, 11 or 12% in motorcycles. In electric vehicles, it is in triple digits. Now, so that is what the festive is. Now, obviously, a festive period, if the average sales in a month is about 8.5%, 9%, for the year, arithmetically speaking, the festive period is about 12%. So obviously there is advancement or postponement of sale, which bumps up the sale like in the festive, like you're saying. But when you start to see the festive could have gone worse, and then that would have put some question marks about the months to follow. But I think the customers coming back to the purchase cycle in such strong numbers indicates that after the sort of dip which is expected in November and December, things should be looking good, back to the kind of forecast we were doing of 6 to 8% for the fiscal.
So that was the view coming in from Bajaj Auto. Kunal, anything in the auto pack that you're seeing attractive at these levels? M&M, of course, is the only outlier, but anything else?
Definitely, from the current levels, if I look for the entire autos as a sector is looking quite weak. So I think it's a sell-on rise rally for the sector in whole. Today, the sector has taken the support at 200 DMA, but I think even that will be eventually breached on the downside. So I think utilize pullback to again sell the sector. We might see further downside for the auto sector towards 23,000 mark. So for me, yes, apart from M&M on the technical charts, nothing is looking great at the current levels. Even a Tata Motors, TVS Motors, or an Aisha Motor, these all are looking weak on the chart. Pullbacks could be an opportunity to sell them.
Okay, well, let's get in. A big market voice. Prateek Agrawal, MD and CEO of Motilal Oswal Asset Management Company, Johnson, on the show today. Prateek, so good talking to you today. At the outset, a very happy news somewhat. Unfortunately, it's not quite starting off in a good note, Prateek. Before we talk about the long-term, Prateek, what's the cause for the concern today? We heard talk of some margin calls getting triggered, some other reasons, but it's come as a surprise to a lot of people, the ferocity of the down move today.
Yeah, so that's been a surprise to us as well. Maybe to some extent, the motor trading, the spaces which were buoyant are correcting, so that happens on a lower volume and more domestic participation versus institutional. So some bit of that may be happening today. But yes, the sharp downtick was not expected. What one also needs to look at is arbitrage funds and their ability to keep absorbing large blocks, especially in the space where F&O exists. If the arbitrage yields fall, the attractiveness of that space versus the usual debt funds reduce, and that can impact the ability to absorb large blocks also. So maybe some bit of that also happening.
Wow. Okay. You reckon that could Prateek, you reckon that could also be a technical factor? Now, if that is indeed the case, would that be long-lived, or would it be a fairly swift corrective move because of, essentially the arbitrage funds led piece that you spoke about?
No, so when the selling pressure is high, the premiums reduce. If the premiums reduce, arbitrage returns would fall, and that will cause that space to be less attractive versus let's say a liquid fund or an ultra short-term fund, and that sets in its own dynamics. It can change very quickly if there is some positivity and we get a day or two of market up move and the premiums get restored. So that is how it is. Now arbitrage used to be a not so large space, but now two funds together maybe 1 lakh crore with rest of the funds also of a reasonable size, though smaller. But we have got two very large funds.
Prateek, hi, good afternoon. Tamanna here. I'm just wondering what the strategy right now is. Are you sitting on the sidelines waiting for a further fall? Is this the time to start deploying cash or wait?
No, so we as a house typically stay almost fully invested. I keep saying this, we are focused high conviction house. Our single position is minimum 2.5% by design. which means 2 to 3% cash is one position cash. So enable trade, we may have that kind of cash, but that's about it. So we stay fully deployed. We are currently fully deployed, but we are deployed in spaces where we see earnings growth trajectory to be very high. Not for 1 quarter, but for 2 to 3 years, a large delta over index. Our belief is over time, market, follows earnings growth. And I think that is the source of outperformance. So we are not there in many spaces. So this result season hasn't been too good, especially for index heavy spaces. Well, we are not there.
What would you look at? Anything that you think is now at the right valuations? I mean, if you look at some of your banking majors have taken quite a tumble, especially in the private bank space. Anything there which is now beginning to look attractive, Prateek?
So I have a differing view there. In any economy, when the economy is being tested, it is just the start of a emerging market kind of a phase. Banks are the easiest way for foreigners to enter into a country, and one finds bank as a part of total market cap, bank as a part of index, increasing over a period of time and then peaking out. To have an index which used to be 35-36% lenders, can it get higher than that? Okay, is point one. As the economy diversifies, as people have other sources of capital, private equity markets, etc. Banks don't remain the same commanding position that they used to have, and that should be reflected in their position in the index as well. Second is valuations itself. Now, just look at it. We have some cases where the market caps may be 2x the lending book. Think of it. Market caps are 2x the lending book. So you lend $100, your market cap increases by 200. Is that sustainable? It does prompt you to think. So while a lot of people would say, on P's they look cheap and etc. Maybe banks are just simply making too much of money, and over time, with so many of them doing practically the same thing, competitive intensity should result in lower margins. But whatever it is, our view on banks is a tad different from that of the street. So our funds are actually reasonably low on banks, and that's worked for us. Maybe a quarter hence, maybe 2 quarters hence, when the NIM pressure reduces and we start to see them deliver earnings growth in excess of the index earnings growth, we would up the banking exposure. But as yet, we are below 10% in most funds.
Prateek, one follow-up. There are murmurs of the index hitting levels of 22,000 as well, and not surprising people. This was not in the realms of conversation when we were at 26,200 just about 40 days ago. So now, one, could it be possible? And anything is possible, of course, but do you believe it's realistic? And what could be the factor? Would it be the earnings-led disappointments thus far, or is it something else if indeed we are headed there?
No, so one, I don't believe we are headed there. Two, I think the market has digested most of the difficult news, difficult phase that was presented before it. So, the result season, everybody knew monsoons are very good. If the monsoons are very good, we tend to work a tad lower. For example, coal would be mined a tad lower. Etc. So there is a small slowdown in economic activity. Now, post-monsoon, the reverse happens. You get a good crop, the farm incomes go up, there is cheer all around. So it is one phase to the next. Then in first quarter, you got general elections. Obviously, government spending did not happen. We looked at government balances with RBI high and liquidity in the system being low. Now you have seen the deficit figures in the first half well under control, which means in the second half government spending should also increase. Third, you were looking at very large NFOs, IPOs, QIP kind of a supply of paper. Now, some of the largest are behind. One or two are left. That's about it. So, one more source of investing, which was probably reducing the flow to the secondary market, would also be out of the window. So many things which impacted market sentiment over the past 2 quarters are now behind us. Yes, one new thing has emerged, which is US bond yields moving up and sharply. So just a month back, there was cheer. They had cut rates by 50 bips. Bond yields had come down to 3.75. And people thought there would be more cuts, and we will get even lower. But now, as we speak, they are at 4.3 in the US, and that is what is causing a lot of money outflow from the country into probably back into the US. So I think that is something that we need to look at. As we see bond yields there stabilizing, I think the selling pressure here should also stabilize. That said, we do believe the bulk of the selling pressure, in terms of intensity, is probably behind us. We can't be getting 7,000-8,000 crore a day kind of outflows. I think if 3,000 to 4,000 crores a day kind of outflows happen, it should prove to be way more sustainable.
Okay. Thank you so much, Prateek, for joining us. It's a tough afternoon, but we'll have to wait and see what the next few days are looking like. Mainly, OMC and gas stocks also in focus. They are sinking in trade. Mihika joining us now with what the key triggers are for the fall. Yes, Mihika?
You have the Nifty oil and gas down about 3.8% intraday. When you talk about the top losers, you have companies like IOCL, BPCL, HPCL and Reliance Industries, and the Indian oil marketing companies have fallen over 4% intraday. Now, when you talk about what's not working for the OMCs, well, up first is the volatility in Brent prices. While they do stand lower on a one-year basis, they have seen almost a 4% uptick in the past week itself, and the OMCs also posted a weak Q2 earnings. They have extended LPG losses. Now, they did announce a commercial price hike by 62 rupees for the 19 kg cylinder. However, when you talk about, while this could offer some relief on the LPG losses that the companies have been facing, they have been facing majorly losses on the retail part of it, which is currently played on a subsidized rate. So the market's not, you can see while this would be positive for the realizations, the stocks have corrected. When you talk about what's not working for Oil India and ONGC, well, production outlook remains uncertain. The companies are yet to post their Q2 results. And lastly, when you look at the city gas company pack, well, IGL, MGL, GGL all fallen 2 to 4% on an intraday basis. One of the major, headwinds for the sector is the lower APM gas allocation, which impacts their operating costs and thereby their profitability. Analysts also expect near-term margins to, remain under pressure, and the PNGRB notice to end network exclusivity is also a key overhang.
Okay, well, that's OMCs for you, though. It's pointless singling out any one bucket because everything is done really, really badly. The only contrast is, interestingly, that two-wheelers are down under pressure today, and we have a four-wheeler name in Mahindra & Mahindra right at the top of the pile when it comes to the Nifty 50 gainers. Nevertheless, we'll take a break on that note. On the other side, try and get you some trading ideas, more trading ideas. Kunal is with us, of course. Joining us will be Siddharth Khemka on the fundamentals. Back with India market close, and let's get before we get to this, let's just get the intraday of the Nifty, because for whatever it's worth, we are now above 24,000 on the Nifty. So should pull up that piece before we get to this. Not that it's big solace, but I think today the street was scared that we will close below 24,000. If you remember, viewers, Kush Bora in the morning said that if a close happens below 24,000, then it's a big negative. Now, again, different people may view this differently, but you certainly view this as an afternoon of a little bit of a recovery from the lows of the day, for whatever it's worth. So this is one part. I do want to see if we can pull up the European indices and just see what they are doing in trade today as well. There are some internal pressures, of course, because of which India has reacted the way it has. Europe is absolutely flat. So the world markets are not gyrating as badly as the Indian markets have corrected. So a bit of recovery that should be cheered for sure. Okay, we'll get to that and some specific stocks which might be bouncing. So we'll show you some breakout alerts as well. But before that, I think an important piece to note is what the Fed, what the election, US election impact could be on the US Fed impact. So Gavekel Research has put out this note, and they put out the two scenarios. Obviously, Kamala Harris win versus Donald Trump win. Kamala Harris win, they say the Fed could choose to sit on its hands, not literally, but just do one rate cut. And even if they do that and then do anything further, Democrats won't bash the Fed for exercising its autonomy, because that's their allegation that Donald Trump will harm the autonomy of the US Fed. Let's move on. So they say that if this victory happens, that the Fed may signal that further rate cuts will be data dependent, and the scenario is bullish for the US dollar and possibly for treasuries as well as growth stocks. Now, what happens in the case of Donald Trump victory? Again, Gavekel view, but they say that the Fed will deliver the expected November cut, possibly following up with a cut in December, even if the economic conditions may or may not warrant it, because the Fed will want to show that it's autonomous. It is something that Fed has guarded very, very zealously, their autonomy. And if they don't do that, then it will open up the Fed to accusations of political meddling. They also say that it's uncertain whether Jerome Powell will choose to stay on after this victory were to happen or no. So it's really interesting, because this one election outcome will have multifold impact on multitude of things and not just the US economy, and hence it becomes so important to look at and analyze.
You know, very, very interesting, Niraj, on what the Fed could do. I don't know if the Fed is going to change its stance depending on who is POTUS, and by 7th of November, you might not even have a full picture, because remember, it's possibly going to be quite a close contest. But we have also pulled up what the key promises are from both sides, and that becomes important as well. Trump, for example, is saying universal tariffs on all imports from all countries. He wants sweeping immigrant deportation programs. He wants to deepen corporate tax cuts, so that perhaps good from the corporate's point of view. Kamala, on the other hand, Kamala Harris wants a hike in corporate tax rates, a federal ban on price gouging in the grocery sector, and she also wants subsidies and tax credits for housing, childcare, and other segments like that. So which one is better for India, which one is worse, really becomes a big question. Siddharth Kemka joining us now, Motilal Oswal Financial Services. Siddharth, great to have you on. A bit of recovery in the market perhaps in the last few minutes. But do you think that you will wait and watch before saying that there is some relief happening?
Yeah, hi, good afternoon, Tamanna. So if you see, yes, I think what Niraj was saying, that the entire street is hoping for a close above that key psychological level of 24,000. But nonetheless, today's market definitely shows the weakness, the inherent weakness that we are going to witness. So I'm not too sure how the technical levels are going to support, but definitely if you look at from a fundamental perspective, there is not much of support. We are in the midst of the earnings season, and we did an interim review of shorts for the coverage companies, and for the 166 companies that are within our coverage, we saw earnings declining by about 8% for the quarter so far, which is lowest in the last 17 quarters. So you can see the kind of pain we are seeing in the quarterly results, and the pain is also there in a lot of large cap names, and we have seen the punishment that the market has given. So I would hold on to my horses and say that the market is likely to consolidate for some more time. There are global headwinds in terms of who will become the next US president, what will the US Fed do, and following that we also have the RBI, and when will the RBI rate cut cycle start. So I think the major event trigger for the market would be the budget, which would now be only in the 1st of Feb, where we could find some solace in the terms of the government spending, which has been lacking in the H1 of this financial year, and which is a major factor driving the slowdown in the economy. So I would say that the market is likely to consolidate for some more time.
Okay, so Siddharth, is there anything that you would want to pick up right now? Some of the heavyweights really getting pummeled today, especially on the banking side. You have RIL as one of the top losers. Would you wait to find the bottom in this market right now as far as the heavyweights are concerned?
So, Tamanna, very difficult to say where the bottom is. My approach would be to look at the results. Companies where the results are already out and they have come out good, that is the space or pockets where I would like to be in. For example, we got very strong numbers from ICICI Bank. So I would say that that's a good stock to keep accumulating. It's very difficult to keep an hazard on what the results may come. And we have seen the kind of disappointment and punishment once the results are out. And even a slightest of miss, the market is very harsh this time to kind of punish any disappointment in kinds of numbers. So clearly, wherever the results are out, which are strong results, valuations are comfortable, those kind of pockets are places where I would start looking at accumulating over the next few weeks.
Okay. Kunal, just one quick follow-up to you. This little bit of a bounce that we've seen from the lows, right? We are no longer 2% lower, 1.23, 1.25%. Are there any stocks which are showing strength which interest you enough to make a small trading position on the long side?
I think PSU banks is something which is looking strong. Probably here we could see some upside in the coming days as well. So structurally, if I look at a long-term perspective, I think PSU banks are showing early signs of bottoming out. We need to have further confirmations on that. But for a trade perspective, Bank of Baroda looks good at the current levels. 252 is where currently the stock is trading. One can keep a stop loss of 247 and look for targets of 258 to 260 on the side.
Okay, there's a little bit of a pickle for Sun Pharma individually as well. The stock has certainly fallen post the US court putting an injunction on the launch of one of the company's drugs, apparently in the hair treatment space. Varsha Johnson with the details. Varsha, 2.5% lower. Is this a big deal or is this a one-day event that will pass?
Well, Niraj, for short term, yes, it is kind of a big deal because the product which the court has banned, they were expecting almost $200 million of revenue. Now, the U.S. District Court of New Jersey has granted a preliminary injunction in a patent dispute case against its hair loss drug, Lexel-V. Now, Sun Pharma cannot launch this product until court ruling or patent expiry. So basically, the company has disagreed with the decision and they plan to appeal further. Now, US FDA had given approval to Sun Pharma for this product with plans for July to August launch, and the expected sales were around $200 million over the next few years. Now, just to give a background, Lexel-V was initially developed by Concert Pharmaceuticals, which Sun Pharma acquired in Jan 2023 for $576 million and so basically because of this product, management was expecting good revenue from this product, and even analysts were expecting almost $200 to $250 million of revenue from this product. So maybe the launch will be delayed. So because the expiry of the patent is around December 26, so they won't be able to launch this product before that. But a few of the brokerages are actually bullish on this company. So for example, Citi has maintained buy with target price of 2080 with upside potential of 12%. They say that the delay may impact the near near-term earnings of 3 to 6% of EPS, and they may impact competitive dynamics as well. While MK has a buy rating with target price of 2,350, upside potential of 31%. They say the Lexelvi's EPS contribution in FY26 will not be that meaningful considering launch-linked costs, but patent expiry and potential settlement will support FY26 launch as the base scenario as per MK, and they are expecting $40 million in FY26 from this product and $124 million in FY27, which is expected from this product. So overall, for short term, yes, the pain will still persist.
Okay, Varsha, thanks a lot for that. A specialty segment comes under a bit of a cloud. Siddharth, anything on Sun or any other pharma names? I mean, this is a setback, but pharma is technically defensive. Did I hear you say that? And therefore, my question to you is there a pharma company back on results otherwise that you like? Also, if you have a view on Sun because of this development.
Yeah, so Niraj, yes, I think overall, if you look at from a results perspective, healthcare has been delivering consistent results for the last 5-6 quarters. The only concern that is coming back is from the regulatory hurdles that we are witnessing for some of the companies. But if you look at from a result perspective, the domestic market growth has been good, and there is a bit recovery from the demand side from the US and European markets. Margins have been have seen an improvement because of the raw metal prices. So I think net overall, I would be positive on the pharma space as an overall defensive space, as well as a pocket which has been delivering good growth. In terms of stocks, if you look at some of the domestic focused names for the likes of Mankind Pharma, which is doing well, which has done an acquisition, looks good. DVs is another one where I think because of the global API business recovering, that is kind of seeing a recovery. And one stock which I like from the entire pack is Ipca Labs, companies into API and formulation. We see good growth in the domestic market. The company's growth has been outpacing the industry. Plus, some of its products are finding approvals in the US market as well. Plus the recent acquisition, the synergies are also playing out well. So we see sharp improvement in profitability, in return ratios and valuations being comfortable. We clearly see a target of 1950 on Ipca Labs, which is kind of 20-23% upside from current levels.
Okay, that's on pharma. Now, it's also a busy week from amongst other things for IPOs too. And Mahima is joining in to tell us what's lined up. Mahima, it's a bit of a sideshow relative to all that's lined up on the global front, but it's fairly important because some very interesting names.
Absolutely, Niraj. So it is important because just to give viewers a bit of context, in 2080 somewhat, we had around 85 companies which came up with their IPOs in the main board space, and this amounted to roughly 1.21 lakh crore is the amount that the companies raised. Now, somewhat 2081 has just started, and in the first week itself, we have 4 main board IPOs coming up, and roughly the total amount of money that they are planning to raise is 18,534 crore in the first week itself, and this is 15% of the 1.21 lakh crore that was raised overall in summer 2080, which is why the first week of summer 2081 will be buzzing with 4 new main board IPOs. To start with, the first IPO, that is Sagility India, will open for subscription and it has an issue size of 2,107 crore and price band is set between 28 to 30 per share. Now in terms of the issue size, as I said, it is 2,107 crore shares. Now OFS of 70 crore shares by promoters have already been taken and affiliated with EQT Private Capital Asia. And overall, if we see the pre-IPO, in the pre-IPO session, it had already raised 366 crore by selling around 2.61% stake to 9 9 institutional investors in the October 31st band itself. Now, moving on, the next IPO in focus in this week will be Acme Solar Holdings. For this particular IPO, the issue size is 2,900 crore. The price band is set between 275 to 289 per share. Issue dates are between 6th of November to 8th of November. It has a fresh issue of 2,395 crore, an offer for sale of around 505 crore. The next IPO, which will again, be in focus in the main board space, is the Niva Bupa Health Insurance IPO, where the issue size is again 2,200 crores. The issue dates are between 7th of November to 11th of November. It has a fresh issue of 800 crores and offer for sale of 1,400 crore, and the price band is set between 70 to 74. But the most awaited IPO, which we've discussed enough about, is the Swiggy IPO, and it's the much awaited IPO where the issue size is around 11,327 crore. The issue date where the IPO will open for subscription is between 6th of November to 8th of November. The price band is set between 371 to 390 per share, where the offer for sale is 6,828 crores and fresh issue of roughly 4,499 crores. Now, in terms of why Swiggy has been the talk of the town, well, a lot of celebrity investors have already invested in the pre-IPO bids for the Swiggy IPO. To name a few, Ramdev Agrawal, Amitabh Bachchan, Rahul Dravid, Madhuri Dixit and Karan Johar have already invested in the Swiggy IPO. And in terms of the market capitalization and the valuation at which Swiggy has been priced, but before I move on to that, Swiggy will be utilizing the funds that will raise for repaying the Scootsie debt of around 1343 crores. It will also put some money in the tech and cloud infrastructure of around 703 crores. It will also spend around 1100 crores in the marketing space, and it will reduce the debt of around 137 crore. Lastly, in terms of the valuation and the market cap, Swiggy is being valued at around $11.3 billion versus that of $26 billion of Zomato. So Zomato's market capitalization, of course, is double as compared to what Swiggy stands at. And Swiggy, as analysts suggest, is around 4 to 6 quarters away in terms of turning into EBITDA profitability. So these are the few IPOs that will definitely be something to watch out for this week.
Yeah, one more celebrity wants to invest in Swiggy. Niraj, are you planning to?
Well, if only celebrity investors made up for
any
people
difference.
To put in. Yeah, exactly.
Any difference. Tele bhar ka difference. Bad timing.
But it's good to know.
Yeah, bad timing for any IPO though right now. I mean, I just want to pull up AFCONs and see what happened to it at the end of the day. And AFCONs listed today. It was a dismal listing, and let's see what's happening with AFCONs right now, because there is some recovery of the day's lows as far as the markets are concerned. All right, slightly above its issue price. So, okay, maybe the tide is turning. There's a bit of recovery for the markets as well. The Nifty IT now in the green. Let's pull up the sectoral indices just for a second if we can. I want to see where you're seeing that recovery coming from, and then we'll go to the Nifty contributors. Nifty IT in the green. Let's pull up sectoral indices just for a second and see where it's only IT. But PSU banks improving, healthcare improving to some extent. Nifty Realty now is the top loser. Let's look at Nifty contributors, and if there is some improvement there, which are the sort of heavyweights which are putting less pressure. Some improvement in RIL. Can I just pull up the intraday for a second, because banks are dragging it down. So is RIL as well. The intraday of the RIL, please. RIL chart. No big difference over there, despite some news filtering in of another IPO around the corner. Siddharth Kemta, since we're speaking about IPOs, would you look at any of the main board ones which are on offer this week? Any views there?
Yeah, sure. I think a lot of IPOs, and that has been one of the key factors that primary market is abuzz, especially when you have a very strong demand. So two of the IPOs, we are investment bankers, so I will avoid giving any views there. The talk of the town, Swiggy, I think, yes, it makes sense to look at Swiggy given that there is immense growth potential in the quick commerce space, specifically where the market is getting excited with the kind of growth as well as profitability some of the larger players like Zomato has shown. Nonetheless, I would say that it is not. It will take some time for the company to come to the path to profitability, which is a very key factor. Fortunately, the valuations looks decent compared to the market. And if you look at what Zepto has also done in the unlisted space, they have raised some money recently, and their valuation of about 5 billion. So that is around 42. So half of what Swiggy is right now in terms of IPO. So I think the stat clearly is in terms of market share, both in food as well as in terms of the quick commerce. I would look at it from a long-term perspective. You can apply from an IPO perspective, but I would again guess that we will get enough opportunities in the listed time post-listing to accumulate the share from a long-term perspective.
Okay, so not too enthused on Swiggy is what Siddharth is saying. Siddharth, good having you. Thanks for taking the time out and have a good remainder of the week.
Thank you.
Kunal, maybe a word on Zomato. Because that also has kind of been sluggish, and also give us your BTST or an STBT call.
I think first talk about Zomato. I think Zomato on the technical charts has been consolidating in a broad lane. 230, 235 has been a support zone for the stock, currently trading at 245. So as long as these supports are level, the view remains bullish. We can see some rally towards 263, 270 on the upside. So Zomato would be on the buy side. On the BTST front, my call over here would be from the metal space, and that is National Aluminium. Even in such a weak market, the stock has been very strong. High top, high bottoms are still intact. In fact, in today's trading session, the stock took support at the 20 DMA and has formed a hammer candle, which is a bullish reversal candle. So clear cut, a good BTST idea from the current levels, 230. 230 is where the stock is trading. One can initiate long positions, keep a stop loss of 225, and look for targets of 235 to 240 on the upside.
Metal name, and that's an interesting one simply because metals are looking at a week which will be impacted by the Chinese stimulus announcements or possible Chinese stimulus announcements that will come in Thursday or Friday, depending on whichever time they come out. But yep, the steel names have been taken to the cleaners, but NMDC, etc., and Alco seem to be doing okay for themselves. So do watch out. That's the BTST from Kunal's end. Okay, before we take Kunal with his final question, I heard out one more voice, the FMCG index, which got knocked down in trade earlier. We spoke to Rahul Arora of Nirmal Bang Institutional Equities on his outlook on the consumption basket. Listen in to what he had to say.
There is something structurally changing in the consumer sector. I think Gillette has been a spectacular set of results. P&G was not too bad, but I think if you're looking at consumer as a basket, Niraj, I would still be aligned towards consumer discretionary, which is hotels, alcobevs, and selectively QSRs. Staples is an underweight for me, and we could potentially look at names like Gillette and P&G, which have come out with good results, and the stocks have been rewarded accordingly.
Well, that's consumption, all right. Okay, just last a few things that I just want to maybe mark before we wrap up the show. And Kunal, a lot of chatter around HDFC Bank and the relative strength out there. Any thoughts here on HDFC Bank?
Yeah, I think on the technical charts, the stock is showing strength with high top, high bottoms intact. But there is resistance on the higher end where even on the November expiry, you have seen there are a lot of positions which have built up around 1760, 1780 call option as well. So clear cut on the derivative front, there is resistance at higher levels. So for them to be taken out, the stock has to show some strength above 1750. So once that is taken out, that will trigger the short sellers, and then probably we will see a move on the upside. So currently it's on a wait and watch list for me. 1750 is a level which I'll be looking out for. If that is taken out, that will trigger a fresh buy for.
Kunal, would you trade a Thyrocare? We're talking about healthcare and what it is doing. Thyrocare is shown a decent move today.
The Thyrocare on the chart, weekly chart, if I say, there was a bullish flag pattern which was formed on technicals. The target of which is placed at around 1000. So 965 is currently where it is trading. So still 35-40 bucks is left on the upside. So yes, you can trade for a short-term perspective for targets of 1000 on the upside. On the downside, one needs to keep a stop loss of 950.
And sugar has looked wobbly. Balrampur, I think, in fact, is now probably trading at the low point of the day. We know that Maharashtra crushing season has gone off, but some of the others too have come off in the session. So keep an eye out for some of these. Previous specialties inched a high. In fact, a 52-week high on a day like today. Previous specialty chemicals, and look at the last 6-month performance of this one. Probably one standout chemical name, though. Remember, it had been beaten down so badly that this was probably waiting to come, but has been a big mover, Kunal. Any thoughts here on Privi speciality?
See, I think if I look at the technical charts, this is on 2022 in the month of May. The stock had witnessed a sharp correction from 1650 to that level of 825. So you can say it was almost half from those levels. And multiple times post that, the stock has rallied toward that 1650 mark and again witnessed correction. Finally, 2 weeks back, the stock broke out of this level. In a weak market, the stock has been forming high top, high bottom formations on the daily chart as well. Fresh breakout has been seen in the stock. So I think 2100 is what I'm looking on a short-term perspective.
Noted. Kunal, great talking to you. Thanks for taking the time out and being with us. Really appreciate your time. Let's start wrapping up the markets. And I don't know, I think you call this, let's get the Nifty up. You call it a bit of a recovery because it's not looking ominous.
As bad.
Not looking ominous for sure. Though 1.3% lower, still disappointing day of trade. Banks nearly 1% lower. Yeah, Tamanna, that's what I was looking at. They're off from the lows of the day. Maybe not as much as the Bank Nifty, but the Nifty for sure looking okay. And I wonder if the heat map has changed a bit, Tamanna, because we were looking at just 3 or 4 stocks or 5 stocks in the green, particularly M&M and some others.
Not too much. Maybe an Indus is barely in the green. Frankly, I think we're reaching a little bit when we're calling this a recovery, Niraj, because if you're seeing a heavyweight like Reliance 3% down, ONGC. I mean, I don't know if this is crude prices concerns, if these are larger concerns that we're seeing, and what exactly is happening here. I mean, a Hero Moto had relatively decent numbers for this month. Yeah. Bajaj Auto says this is one of their best Diwali seasons ever. But that's talk about 4% down. So there is a lot of pain right now in the markets, which is not going anywhere. Let's look at the broader markets also as we begin to wrap up the session for today. I mean, and we'll be lucky if we end above 24,000 on the Nifty. Let's put it that way. 1.5% nearly down on the mid cap 150, the small cap also nearly 2% down. I just want to see what micro caps are doing and whether the crack is even deeper over there. Yeah, just about 2% down as well. Look at the dive across all indices here right after we've opened. So this pressure has just completely not given way. Reality stocks are the worst hit right now. And we'll just pull up the Nifty 500 gainers and losers, or the BSE 500 gainers and losers as well, just for a second. The whole list hasn't changed. Just an angel one has come in here towards the end and plummeted a fair bit, Niraj.
Yeah, 6% down for that one. CSC, PVR, Inox, etc. PVR, the Diwali hasn't turned out to be a pretty one for them.
Yeah.
Fine Organics doing okay. First Source, Garwale Tech. Interestingly, Max Estates from the real estate pack on a day like this is actually trading in the green. So on the back of that research note.
Investix note, yeah.
Investix note. So is Cipla on that Investec note and Nomura note ending in the green. So a few stocks have done okay. Otherwise, a lot of pain, Tamanna.
A lot of pain, which seems like it might continue for some time. Should we just look quickly at the advanced decline ratio and see where the market breadth is ending off? Yeah. That's not looking good at all. I mean, what could change between today and tomorrow? Nothing much, unfortunately. All of the factors that remain an overhang today continue tomorrow as well. And even as we wrap up India Market Close, and thank you for joining us, do stay tuned for our special coverage coming right up, where we're going to break down the reasons for this market mayhem and tell you what you should do. Is this a buy, sell or hold market? All of that after the break. Stay tuned for more. What a tough day it has been for the markets. Sell-off right from the get-go continues, and we're looking like we're in for a very tough week. On this special show, we're aiming to break down the key reasons for the kind of market sell-off we're seeing and really tell you what you should do in the days to come. But let's start with a recap of the kind of day, and it's been a manic Monday by all reasoning, Niraj.
Yes, indeed. So, tough day for the markets for sure in today's trade. You argue that maybe there was off the lows of the day, but be that as it may, we ended well and truly below the 24,100 mark, and in fact about a few points below 24,000 as well. So you could argue we've closed around that level. Broader markets saw an even stronger hit, with the micro cap index being down nearly 1.7 or 1.8%, and the market breadth nearly 1 or 2:7 in favor of the declines. And across the board there was selling. If you just look at the Nifty 50 gainers and losers as well, save for a Mahindra & Mahindra and save for a couple of other news-making stocks, a clutch of others corrected. Reliance, HDFC Bank, ICICI and Axis Bank. And remember, Bank Nifty was not even the principal culprit at the start of the trading day. There are stocks like ONGC, which have corrected quite viciously. BPCL has been down in trade from that oil and gas space. So a clutch of those large cap names have looked very, very wobbly in the session. The two-wheeler names in Hero and Bajaj Auto too have wobbled. I look at the broader end of the spectrum too. Yes, there were winners, and there were a few stocks which did well. So the BSE 500 winners and losers list, if you just look at that very quickly, you will see what I'm telling about. There are winners. Fine Organics had a good move today. Galaxy Surfactants and Privy Speciality and a few others had a decent outing as well. Aegis Logistics about 3.5%. There was First Source, which gained another 5% in trade. But the gashes were very strong. Polymedicure, Vodafone, Angel One, CESC, PVR, Inox being hit about 5%. It's a wrap on the knuckles for a lot of these stocks. So net, a tough outing. The new kid on the block, though, recovered a lot of lost ground. Afcons Infra, after starting off the day in the red, ended the day marginally in the green. And maybe that is a bit of a respite for that. But otherwise, it was a day that's best forgotten from a bull's perspective.
Definitely best forgotten. Unfortunately, this might not be the end of the pain, because if you look at the key factors that are causing the pain in the market today, it's not something that could disappear in the next couple of days. In fact, you might see a bit of a tough week, and these are some of the reasons. For one, you have earnings which have not really been the best. 34 out of 50 Nifty companies have announced results so far. 10 have beaten estimates, 13 have met, while 11 have missed expectations. But even in the broader markets, by and large, company results have not been up to the mark in terms of how much the stocks have run up. So on the valuations criteria, they've fallen short. Reason number two, of course, is the US election. That is the big one. On the 5th is when voting starts. We'll have a clearer picture perhaps by 6th or 7th morning. And this is a close fight. Will it be a Trump victory or a Harris victory? Then becomes very, very important from the market's perspective. Markets actually penciling in a Trump return for a second term. Reason number three for the markets to feel this kind of heat, of course, is geopolitical concerns. Iran's Ayatollah has announced that they would hit back at Israel soon. Crude prices have been rising. OPEC Plus has pushed forward their production output increase, and crude prices going higher is never good news for India. FIIs, of course, is the other factor. They've continued to sell over 1,20,000 crores just in the month of October, and nothing seems to be changing in November either. Remember, China is having a series of very crucial meets this entire week, where they're going to be talking about measures to prop up their economy. If those are very, very positive, you could see more foreign money heading there. But let's get a view from some of our speakers today. Mihir Vora, CIO of Trust Mutual Fund, joins us today. I'm also joined by Deepak Shenoy, founder and CEO of Capital Mind, now on the show. Welcome to both of you, and thank you so much for speaking with us. Deepak, let me start with your take. Did you expect the ferocity of the fall today?
To be fair, Tamanna, I think the ferocity is only because we have looked at it from the Muhurat trading prices,
Yeah.
which were abnormally high, I would imagine, because no FII participated, everything went up. If you count from the day
Thursday.
before
Yeah.
trading, the stocks are down less than 1%, so it's not meaningful to speak about. We're not even down 10% from the top. So yeah, I mean, it's nice to know that the stocks have fallen, but really not meaningfully enough for us to, as a market as a whole. But individual stocks have corrected 25-30%, so they give you a chance meaningfully to kind of participate going forward. I think we are going to be in a situation where uncertainty as it evolves, whether it's a US election result or what happens with Iran, Israel, as certainty starts to come in, I think markets will get more stable. We've seen some record FII selling, and even then we're down less than 10%. So I'm actually surprised it's such a resilient market so far. And I think given we're just seeing inflows everywhere, we're going to see a fairly record set of inflows even into mutual funds in the month of October. So it's going to be, I think it's going to be very dichotomous. I don't think this is a meaningful enough fall for us to feel miserable about. It's just that the numbers from Muhurat trading day looks bad. That's all.
You know, maybe I get your point, Deepak, that if I count from Thursday, maybe it's not looking that bad. But the fact is that there seems to be just no support coming in. And if you see the way the index has behaved, I mean, the other way to look at it is also the wide breadth of the fall. It's not even few sectors or few stocks, it's across the board. What do you think are the primary reasons?
Again, I think part of this is, I mean, there are three questions to it. First, the geopolitical uncertainties worldwide, specifically Israel, Iran, and the US elections, because the two candidates have such widely dichotomous policies that, you know, almost like, oh, we're going to have to do completely different things if X comes to power versus Y, and based on their actions thereafter. So that is one challenge. The second one is that FII selling has been unabated. So to the extent that I feel we're resilient, I feel we would have fallen a lot more had we sold 120,000 crores in any given month, maybe 5 years ago, compared to what has happened right now. So a large part of the rally, the fall, has actually been taken up by domestic investors buying, and domestic investors include mutual funds and institutions and so on. The third part, and I think this is more meaningful to us, is that earnings have not come in a very interesting fashion. Till now, whatever Nifty results have come, even the top 500, we're talking about a 10% earnings growth year on year for the September quarter, when we should have had a slightly better number. Of course, a lot of results still to come, so we can't really pass judgment right now. But till now, results, especially in the financials, especially in consumption and retail, we have not seen something major as an uptick. Auto numbers are also not as strong as one would have made them out to be. Maruti was flat, Tata Motors was flat. I think M&M did quite well in terms of numbers. Two-wheelers have done reasonably well, but you don't have that kind of euphoric jump in those numbers that we would have expected because of the Diwali month. Last time, I think the Diwali month was November. This time it's October, so you should obviously see a much higher jump. So I think that way has, we've seen some kind of disappointment. So these three factors have probably led to some kind of weakness. But again, is this weakness less than 10% from the top? Is it even worth talking about less than 10% of the top? I mean, I'm just a victim of history. So 10% used to be the point at which you'd start getting worried. And now we seem to be worried, even much more worried even before that.
Some of those people who are worrying, Deepak, are victims of recent history, wherein a 4-5% drop has been bought into very, very quickly. So, that's the point. Mihir, I'd like to bring you in this discussion. Granted, 10% in the past wouldn't have worried, just that the last 4 years, we're not used to such moves as well. And this 9-10%, cool. I agree with Deepak, it's not 10%, it's slightly less than 10.
Yeah.
But this corrective move has happened from September 26th or thereabouts, when we were sitting pretty at 26,200 or thereabouts. Now, do you think that this one-way slide is overdone, or was this warranted, and can it do more?
So, Niraj, again, Tamanna, I think we discussed it last week also. First is that it's not really a correction, frankly. The Nifty is something that we are obsessed about, but the Nifty is down about 9% from the peak. But if you look at the small cap index, which is the much wider market, that's hardly down 6% from the 52-week high. That's one data point. Second is, let's put the perspective of today's fall. Let's put into perspective today's fall against what happened last week. Last week, the Nifty was up 0.5% total, whereas the small cap index was up almost 6%. So, it's just giving back a little bit of the gains of last week. It's about 6% down from the 52-week high. So I really don't think it's a topic worth worrying about, frankly speaking. Second point, which I would like to mention, is that our obsession with Nifty is a bit of an issue, because now it's more and more not representing the domestic economy. If you look at the Nifty components, the largest is financial services. Let's put that aside. But then we have big absolute earning contributors like energy, oil and gas, metals, cement, IT, which are all globally linked. The thing is that China, the biggest consumer of commodities, is slowing down, and commodity prices have been weak. To that extent, they will put pressure on the Nifty earnings. In fact, we all know that Nifty earnings overall in this results season have been cut. But if you analyze why the Nifty earnings have been cut, earnings estimates for FY25 and FY26, why they have been cut, a large chunk of the cut is happening because of these global sectors. So there is a little bit of disconnect growing between the Nifty representing the Indian domestic economy and the wider market. So really, if you look at the wider market, small caps, mid caps, nothing to worry about. Nifty fallen about 8.9% from the peak. It's been a one-way slide probably, but I don't think it's anything that we need to worry about so far.
What we've established so far in the show, it's not that much. It's looking sharper than it is because Diwali Muhurat trading was a little optimistic. And don't worry so much. It's not that far away from the peak. It's not that serious. So then let me ask you this, Mihir. More to come? More to come, and would you be deploying right now?
Certainly, as you know, we launched a new fund which just closed last week. So we have some ammunition to deploy. I'm quite happy about the fall. So that's one. The second is the market is also probably globally taking a bit off the table for the outcome of the election results in the US. Nobody likes uncertainty. So when there is an event in the next few days coming up, probably you just want to keep some dry powder. And that's what things are happening. Incidentally, if you look at Asia, frankly, it's not down that much. US futures are also not down that much. I think this was more of an India reaction to, as we discussed, the Muhurat trading, and probably the fact that small caps did run up very sharply in the past week.
So good timing for you, Mir. I find that interesting. As a fund, as someone who's running a fund, sitting with capital right now, and the opportunity to give good returns because markets are dropping. What are you looking at? What are you finding interesting? And Deepak, I'm going to come to you on the same question in just a bit. But first, Mihir, let's get your view.
So it's the same themes that we've liked for quite some time. The domestic themes, basically, whether it's a premium consumption or financialization of savings, which means the non-lenders, the physical asset creation themes like cap goods, infra, real estate, and construction, those kind of themes, including the sectors where the government is focusing on, like power, defense, railways. So all that bunch, and the new age companies, which of course are disrupting the existing businesses.
Deepak, if I were to ask you, which are the spaces that you're finding most attractive? I mean, look at what's happening with banks. And their numbers were not that bad to warrant this kind of a drubbing. You're looking at buying right now. Would you look at large caps? Would you look at banks? Would you look at private banks?
So, to be fair, Tamanna, I think we've looked at the banking and the financial system in a dichotomous way. There's the financial infrastructure players, we love them, whether it is the exchanges themselves or the companies that work closely with the exchanges, the depositories or some brokers and so on. I think they present a very interesting picture going forward. From a lending perspective, avoiding the non-bank financial companies that are lending directly on unsecured personal loans simply because I think there's a lot of stress in that area. It's going to take about another quarter of really, we've seen the numbers. The stress is really, really bad in some of them. We're talking 8 to 10% NPAs on unsecured personal. And I feel this is going to get worse before it gets better. So stock prices are going to correct more meaningfully at some point to offer a better risk reward for us getting in. Private banks, large private banks are where the interest is because they're more diversified. They have still relatively strong CASA ratios to keep their cost of funding low. They do a lot more secured and corporate lending. So I think that presents a attractive proposition for us. Not getting into the PSU bank pack yet. So overall, financials is a dichotomous thing. So large lenders, financial infrastructure players, but not the non-bank lenders who are doing unstructured or unsecured or microfinance. Having said that, I think financialization is a solid theme for India. We've not seen anything yet in comparison with what we are likely to. Our level of financialization is very small compared to the West. We're growing really, really fast to the point where our payment systems are way better than most payment systems around the world, and they're only increasing every month. I think last month was 20 plus lakh crores on UPI versus
what is the equity play on the financialization theme? How do I play that in the stock market right now?
So you look at the infrastructure, financial infrastructure, multiple areas, right? So you got savings, investments, and credit, right? So you got at some level, payments, investment, and credit. So each of these areas is we'll have different players that play in, but some parts would be for investments, you'd have a dichotomy between insurance and investment in the first place, because they're more interlinked in India. So you got players in all of them. Within the investment space, there are the direct, say a mutual fund AMC at one level, or depository at another level, or a broker at the third level. All these play part of financial infrastructure for investment. For banks, which are straddled across all three, the lending part would be the most exciting or growth-oriented part, but there are lots of areas in fees, investments, and in payments where banks can actually add a tremendous amount of heft. So these players, I think, form parts of the financial infrastructure of the nation. And based on how strong this sector gets, you can actually invest in cross players. People in e-commerce, for instance, benefit from a large payment ecosystem. They're not financialization directly, but they're downstream benefits of financialization that take precedence. We've never had a logistics infrastructure as good as we have today, but it's probably going to get 2x or 3x better in the future, given the downstream elements that are happening in infrastructure, in capex infrastructure, in roads, ports, airports, and so on. So I think, it's a broader play. The two things that I would do separately in India also is we're focusing a lot on energy independence. So going away from crude as the primary source of, say, transport fuel, and also, getting into nuclear, getting into hydrogen, getting into solar and wind and the power ecosystem. And also in import substitution, where instead of encouraging India to import and relabel and sell to Indians, we're saying manufacture here. So make for India rather than make in India. That's the theme that we'd focus on. Financialization is a broad theme. I think you'll have a lot of players in the system, and where sometimes it's just the fact that some companies themselves have more value from their investments than they have from their primary operations. So even that can be a financialization play.
Okay, Mihir, what are the big themes and sectors that you would look like? I'm sure you'll not give me any stocks, so anything as specific as you can will be useful to our viewers right now who are wondering what's happening. Maybe people are worried. They're wondering whether to continue their SIPs. They're waiting maybe for a further knock before investing lump sum and thinking of what to do and which sectors to look at.
Certainly. So, as I said, one of the things that we really like is premium consumption. So whether it's higher end houses or auto or travel and tourism, higher end cars, all the items of hotel, for example, all the premium items are still seeing good consumption. The festival season demand seems to have been okay. There were some concerns in the couple of weeks ago about slowdown, But now there are mixed reports. There seem to be some pockets of good traction as far as festive demand is concerned. And once we know the full extent of the sowing season and the harvesting season, we'll probably get a better hang on the consumption theme. So I think premium consumption continues. Deepak already mentioned a lot about financialization of savings, lenders and non-lenders. So we do like lenders because they have become cheap, especially the large private sector banks. They are quite reasonably valued, and there are not major concerns about unsecured loans, etc. in the large private sector banks. Those will continue to like. But the non-lenders, as Deepak mentioned, which includes insurance, wealth management, asset management, broking, capital market, registrars, distributors, financial distributors. That bunch, I think, will continue to grow secularly. And as we know that most of the plays in these segments happen to be the mid and small cap space. So when we talked about the broad market, that's what we are talking about. We also like chemicals. Because I think Make in India is a big theme, Make for India as well as for exports, China Plus One. And more importantly, a lot of the leading companies have been correcting quite sharply for the last 1.5 years with good reason, because margins have come down as China came back into production. But I think they have set up large capacities, and now we are betting that even if margin expansion doesn't happen, there will be a lot of volume growth. So that's one big theme that we like in the chemical space. Second is pharma, not only generic, but CDMO is a big play for us. I think that's a theme that can be a multi-year opportunity for Indian pharma, almost supplementing the fact that, or even offsetting the fact that generic pricing has come down and margins had come down. But I think this can be the next growth driver for the Indian pharmaceutical industry. Third is mid-cap IT, niche companies we like, and the whole gamut of the infra space, defense, railways, power sector, including renewables and non-renewables. The entire bunch of physical asset creation, as I put it, which includes cap goods, construction, infra, and real estate. We continue to like. So that's where we are playing at.
Okay. As we wrap up, and a lot of ideas there, Mihir, thank you, I appreciate, because this is what viewers really want to take away. But as we wrap up, the big factor in the next maybe 72 hours or so is going to be US elections for global markets. I'm just wondering both of your views on whether you think it's going to be the big push or the change for Indian markets as well. Mihir, and having said that, who do you think will win, Trump or Kamala?
Right now, it looks like even Stevens, so not really taking a bet there.
Yeah.
But my guess is that Trump will be long-term good for India, because I think India-US relationships can probably grow closer in the longer term. But in the shorter term, there'll be lots of moving parts, because Trump is talking about corporate tax cuts, which means that US corporates will improve their profitability, increase investments, etc. There might be some further money flowing away into US, because that's really been a big magnet of. So that's one. Secondly, if Trump talks about high tariff barriers, then China will have a problem, and they might start temporarily dumping stuff to the global market, which means commodities and other exports can really get cheap, which is a mixed bag, because we also import commodities, and plus other manufactured items can be a dumping. So I think long term is good, but short term may be a volatile. If the Democrats come in, then probably it will be more of the same.
So, Deepak, a Trump win, say at the end of this week, if Trump wins, Fed cuts rates 25 basis points as is expected, and nothing major out from China, more changes on the Indian market front as well?
It depends on what he does. If he starts increasing tariffs, I think there's going to be some kind of worldwide repercussion on it. But I think that will only benefit India because, we're already subject to some of the largest tariffs that the US has. Our textile tariffs are one of the largest already. So, and we don't export that much more to the US in terms of goods, a lot more in terms of services. But I expect that, regardless of who comes, there's going to be some drama that happens, whether it is an increase in, the war contours in the Middle East, which I think has been paused primarily to get over this election results in the US, and it could get more aggressive. So I don't think it's necessarily bullish in the short term. Though my feeling is that someone like, I predicted in our annual, we predict once a year, so we wrote a prediction that it's most likely going to be Trump. But that's just, 50% chance either ways. And plus I have
that's the best. Those are the best predictions to make, Deepak.
I know. I mean, you just say something.
You're venturing where psephologists dare dread. So 50%.
Yeah, I think if you're going to predict, you might as well predict something that can be answered with a yes or a no. But I don't think this is going to be meaningful for India. If there's going to be trouble geopolitically that continues, that's going to be. But I feel here that there'll be a lot less to talk about from an election perspective. It's so entertaining, the US politics. And I feel the GDP of the US will just come down after the elections because there's not so much, squirrels and whatnot. So,
entertaining it is. But then we have all of our own state elections to talk about. So we'll never run out of things to talk about in that sense. But thank you so much. It's been fantastic chatting with both of you, Mihir Vora, Deepak Shenoy, there on the kind of Monday mayhem we've seen. Stay calm is the large message coming out. A lot of great stories is there still. Fundamentally, nothing much has changed for India. Maybe a bit of a turbulent week right now. Wait and watch for the right opportunity. Well, that is a wrap on this special show. Thank you so much for joining us. But stay tuned. A lot more coming up on the other side on NDTV Profit.
Nifty Sensex record their worst close in over 4 months. The VIX jumped 10.67%, the highest level since August 7th. All sectoral indices took a hit, with realty tipping nearly 3%. Weak corporate earnings in the second quarter, the upcoming US election results and geopolitical uncertainties drag markets lower. Crude oil prices rise on reports that Iran may retaliate after Israel's recent attacks. OPEC Plus agrees to delay December output increase by another month. Brent rises 4% in past week. Rupee weakens by 3 paise to a record low of 84.11 against the US dollar on the back of weak closing of 84.08 on Friday. Massive FII selling could have triggered lows. The post-Diwali week promises to be a bustling primary market as Swiggy, Sagility, Acme Solar and Niva Bupa prepare for major IPO launches. Electric two-wheeler scooters remain in focus on strong October sales data. Ola Electric cements top position and TVS Motor regains the number 2 position by market share. Ruckus erupts in Jammu and Kashmir Assembly as PDP lawmaker Waheed Parra tables resolution against Article 370 scrapping amidst BJP opposition. The Assembly held its first sitting in 6 years. The long-awaited US elections begin tomorrow. Final state of polls reveal that Vice President Kamala Harris appears to have a slight lead in enough states to win electorals, but key swing states to decide the outcome. Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we'll bring you the latest on markets as well as national and international news. It was a volatile day on the Lal Street with Nifty and Sensex recording their worst close in over 4 months. The VIX jumped 10.67%, the highest level since August 7th. All sectoral indices took a hit, with realty dipping nearly 3% in trade today. But what dragged the markets lower? Niraj is standing by, along with Tamanna and Inamdar, explaining the situation.
Tough day for the markets for sure in today's trade. You argue that maybe there was off the lows of the day, but be that as it may, we ended well and truly below the 24,100 mark, and in fact about a few points below 24,000 as well. So you could argue we've closed around that level. Broader markets saw an even stronger hit, with the micro cap index being down nearly 1.7 or 1.8%, and the market breadth nearly 1 or 2:7 in favor of the declines. And across the board there was selling. If you just look at the Nifty 50 gainers and losers as well, save for a Mahindra & Mahindra and save for a couple of other news-making stocks, a clutch of others corrected. Reliance, HDFC Bank, ICICI and Axis Bank. And remember, Bank Nifty was not even the principal culprit at the start of the trading day. There are stocks like ONGC, which have corrected quite viciously. BPCL has been down in trade from that oil and gas space. So a clutch of those large cap names have looked very, very wobbly in the session. The two-wheeler names in Hero and Bajaj Auto too have wobbled. I look at the broader end of the spectrum too. Yes, there were winners and there were a few stocks which did well. So the BSE 500 winners and losers list, if you just look at that very quickly, you will see what I'm telling about. There are winners. Fine Organics had a good move today. Galaxy Surfactants and Privi Speciality and a few others had a decent outing as well. Aegis Logistics about 3.5%. There was First Source which gained another 5% in trade. But the gashes were very strong. Polymedicure, Vodafone, Angel One, CESC, PVR, Inox being hit about 5%. It's a wrap on the knuckles for a lot of these stocks. So net, a tough outing. The new kid on the block though recovered a lot of lost ground. Afcons Infra, after starting off the day in the red, ended the day marginally in the green, and maybe that is a bit of a respite for that. But otherwise, it was a day that's best forgotten from a bull's perspective.
Definitely best forgotten. Unfortunately, this might not be the end of the pain, because if you look at the key factors that are causing the pain in the market today, it's not something that could disappear in the next couple of days. In fact, you might see a bit of a tough week, and these are some of the reasons. For one, you have earnings which have not really been the best. 34 out of 50 Nifty companies have announced results so far. 10 have beaten estimates, 13 have met, while 11 have missed expectations. But even in the broader markets, by and large, company results have not been up to the mark in terms of how much the stocks have run up. So on the valuations criteria, they've fallen short. Reason number two, of course, is the US election. That is the big one. On the 5th is when voting starts. We'll have a clearer picture perhaps by 6th or 7th morning. And this is a close fight. Will it be a Trump victory or a Harris victory then becomes very, very important from the market's perspective. Markets actually penciling in a Trump return for a second term. Reason number 3 for the markets to feel this kind of heat, of course, is geopolitical concerns. Iran's Ayatollah has announced that they would hit back at Israel soon. Crude prices have been rising. OPEC Plus has pushed forward their production output increase, and crude prices going higher is never good news for India. FIIs, of course, is the other factor. They've continued to sell over 1,20,000 crores just in the month of October, and nothing seems to be changing in November either. Remember, China is having a series of very crucial meets this entire week where they're going to be talking about measures to prop up their economy. If those are very, very positive, you could see more foreign money heading there.
Thank you to the two of you for explaining us the heat behind the market situation today and in the coming future. Now, earlier in the day today, we also spoke to Rahul Arora, who's the CEO of Nirmal Bang Institutional Equities, about his views on today's market scenario. Take a look.
This was, I mean, you've probably heard it enough and you'll probably get bored with my answer, but I think this was long overdue. I think there was a certain reality check that was required in the market. Fundamental earnings growth was never supporting where the valuations were in the first place. And, you know, we saw that beginning with the defense sector about 4 months back. It went on to the EMS side, consumer durables, electricals. It slowly moved into IT services, then consumer staples again after the results, and now it's, you know, percolating into auto. So I think you're sort of seeing, Niraj, as we were discussing the other day on Mohra trading as well, this is probably the worst earnings cycle that we have seen going into a Diwali in a long, long time.
Well, apart from Rahul Arora, we also spoke to Deepak Shenoy, who's the founder and CEO of Capital Mind, about the reasons behind today's market crash and is it a worry for investors? Listen in.
I think the ferocity is only because we have looked at it from the Mohra trading prices, which were abnormally high, I would imagine, because no FII participated, everything went up. If you count from the day before trading, the stocks are down less than 1%, so it's not meaningful to speak about. We're not even down 10% from the top. So yeah, I mean, it's nice to know that the stocks have fallen, but really not meaningfully enough for us to, as a market as a whole. But individual stocks have corrected 25-30%, so they give you a chance meaningfully to kind of participate going forward. I think we are going to be in a situation where uncertainty as it evolves, whether it's a US election result or what happens with Iran, Israel, as certainty starts to come in, I think markets will get more stable.
Now, while those were some expert views on the current market scenario, the oil and gas index cracks as volatile global crude prices and weak Q2 earnings drag the index. Mihika joins in with more details on this.
You have the Nifty oil and gas down about 3.8% intraday. When you talk about the top losers, you have companies like IOCL, BPCL, HPCL, and Reliance Industries.